Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, thanks for coming in.
Hey, hi, Brian. Good to see you again. Yeah,
Now, Kelvin, we're going to take a look at crypto markets first. Bitcoin
sure.
is at 38,976.5. It's down 0.33%. Ethereum is at 2,436.59. It's down 3.77%. Now, if we look at the regional stock exchanges, the SGX is at 3,147.76. It's up 0.26%. Bursa Malaysia is at 1,571.01. It's down 0.46%. Across the region, then we have the Nikkei, which is in fact down sharply 1.1% at 28,967. The Shanghai Composite is at 3,524. It's up 0.17%. The Hang Seng is at 28,516.97. It's up 0.28%. The ASX 200 is down 0.25% at 7,367.90. And rounding up the numbers, we've got the Kospi, which is at 3,264. It's down 0.47. So it's mostly mixed throughout the region, Kelvin. What's the reason for this?
Okay, I think one of the mixed performance that we see in the Asia stock market today is actually due to, I would say, it's a bit of slight hawkish guidance from the Fed FOMC overnight, which is early Asia time, which is on Thursday about 2:30 a.m. to 2 a.m. So what we're seeing over here is that in the dot plot, that means IE is where the projection from the Fed officials, they have actually started to see bring forward the first Federal Reserve hike from 2024 to 2023. So and also there's also a couple of officials that are actually saying that, hey, there's not even, it may not be even one hike in 2023. They start to actually pencil in two rate hikes. So from this perspective, right, what we could see over here is that it seems to me that within the Fed official cycle, there's actually debate going on saying that, hey, the current situation right now in the US and in the world globally, we start to see a bit of heightened risk from the inflationary side of the story. So that actually gave rise to actually what we saw earlier at the start of this year till till now, to the first half of this year, where we start to see rising commodity prices and starts to creep up into business costs, which is manufacturing input costs. So some of the Fed officials have started concern about this aspect of the economy. So that's why we start to see a bit of risk off in the US stock market yesterday. But on the positive side, what we start to see over here is that they actually managed to trim off the session lows. And in fact, what I see positively in terms of the price action, the S&P 500 as well as the Nasdaq 100, they managed to reverse up right above their respective key medium-term support, which is at 4,180 for the S&P, and the Nasdaq 100 is at 13,700.
Now, so the central bank, however, did not give any indication when they are going to be cutting back on bond buying program, correct?
Yes, precisely.
So how is that going to impact overall Asian equity markets and Asian currencies?
Okay, I think what we could see, let's take it one step at a time first. Firstly, it seems to me that the Fed right now is trying to play a kind of a mind game and a kind of a policy guidance game among the market participants. So as we know that since we talk about the previous meeting for March, and in the previous meeting in March, there's a lot of guessing work to say that, hey, when the Fed might start to temper its bond purchase, it could be this year or it could be early next year, due to the state of the inflationary environment. Okay, but yesterday, based on what we see from the dot plot, the latest dot plot figures, which is the interest rate projection, it seems to me that this wild guess starts to be a bit kind of diluted already. That means the Fed has started to give a bit of policy signal, hey, be prepared, we may start to temper towards the end of this year. There's a possibility right now because I already start to lay down the ground rules from the dot plot. But what's interesting is that after that dot plot interest rate projection, that means it's more kind of hawkish thing, it actually caused inflationary expectation as being priced in by the markets, which is I'm looking at this 5-year break even. It actually traded down much lower yesterday to around 8 basis points, 8 basis point lower to 2.41%. So what it means that over here is that inflationary expectation has started to come down from yesterday after the interest rate, the latest interest rate dot plot projection. So what it means that the market seems to be saying that, hey, the Fed right now is actually watching the inflationary numbers, so they may start to act. So right now, inflationary expectation has started to tone down. So this is what actually the Fed wants, you see. So if the inflationary expectation starts to come down slowly at this juncture in time, from the way they start to lay their groundwork, it may actually not to lead to tempering, yeah, towards the end of this year, because they already won the battle in terms of inflationary expectation. Yeah.
Now then, how does this impact us in Asian equity markets and Asian currencies?
Okay, so if that's the case, in general, right, that should be actually be positive. I'll say it's not so bad in terms of for Asia stock market as per se. So what we could see over there, if this scenario start to play out, I still believe that the major uptrend that is in place in March low last year remains intact. So that could actually explain why we start to see this kind of mixed performance in today's Asia market as of now. Yeah, because if you're talking about it's a really kind of a very kind of a hawkish thing where we lead to the kind of risk-off scenario, by right, we should start to see a whole sea of red for Asia stock markets.
Now, what other events for the rest of the week that we potentially move markets?
Okay, so what's interesting now for tomorrow will be Friday. Tomorrow will be the Bank of Japan monetary policy meeting. That's around 11 a.m. to 12 p.m. Singapore time, Asia time. So it'll be interesting to see is there any changes for BOJ policy, because I believe that the markets will expect BOJ to remain as dovish as it used to be for donkey years, because at the end of the day, it still wants to because inflation is still very, very low in Japan. So what's concerning about the Japan over is that, especially I'm looking at the dollar yen. Most dollar yen actually is up pretty sharply today. In fact, in general, the dollar strength has been getting a fair bit since yesterday US session. So the key resistance, right, is a kind of a major range stop resistance on the dollar yen. It will be at 112.10. So it's a range stop resistance since late April last year. Okay. Sorry, late April 2019. So that's pretty significant, yeah.
All right. Kelvin, thank you very much for coming on the show.
Thank you, Brian. Yeah.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech Asian Midday Market Watch. I'm Brian Fernandez. Please like and subscribe our various platforms on Facebook and LinkedIn, as well as our website, www.biztech.asia. Thank you very much for tuning in.